Ladies and gentlemen, welcome to our latest podcast. Now, we have one of our favorites, Justus, the CEO of Mad Paws. Many of our viewers and listeners know the story, but Justus, please tell us about Mad Paws for those who haven't heard or watched us before.
Yeah, hi John. Thanks for having me. And for anyone who doesn't know about Mad Paws, we're Australia's leading pet services marketplace and retail business. So we're started as the number one pet services marketplace with over 60,000 pets on the platform, where you can find somebody to look after your pet when you're going on holidays. But then over the last 3 years, we've also added retail businesses and subscription businesses to our company. And we're in the process of kind of building one of the number one pet destinations where you find anything for your pets to make sure they're happy, healthy, and live as long as possible.
Now, recently you had a big milestone, profitability. A lot of our small cap tech companies haven't achieved that yet. You have. Now, talk to us and as to how that was achieved, and is it sustainable, this profitability?
Yeah, absolutely. So it was, one of our key targets being listed now. We've kind of pushed forward profitability a little bit and kind of really focused on that for the last 2 years. And I think we've been kind of super successful with that. The team's done an amazing job. We've focused a lot on driving efficiencies in the business, particularly on the retail side of the business. So, as you know, the bottom line counts, and we've done a lot of work in automating our processes in the warehouses, but also customer support. We've got AI now helping us in customer support, but also in some of the more complicated parts of our retail businesses. We're offering prescription medications to customers. We now have a whole lot of help and products that we've built to make sure that process is as easy as possible for our admin teams, which meant that we're running now just about half the team size that we needed before for the same amount of volume. So it just tells you in the amount of work and the amount of success we had in kind of driving these efficiencies in the business. And then on the other hand, we're still growing 20% plus year on year from a marketplace and retail perspective. So there's a lot of good things happening in the business. And I think there's a couple of more interesting things to come, and I'm sure we're going to talk about that going forward.
You mentioned AI there. So can AI be used to stop leakage? As in, for example, I jump on the platform, use your services, I build a relationship with that particular individual. We have a pay me cash in hand deal. Mad Paws is cut out. Can AI be used to prevent that? And what other motivation is there for me to stay on the platform?
Yeah, so I mean, leakage is one of the things that any services marketplace has to kind of work on, and it's one of our key challenges. And I think we're doing a pretty good job at it. There's still, there's a whole lot more we can do further on the track. But so AI is on a couple of sides here. One is we're kind of looking at the communication between sitters and owners as well, and it will flag certain scenarios where we think that leakage could occur, right? And so this is kind of one of the things that we've kind of rolled out, and it's been very successful. If it flags a relationship as potentially leakage, then we'll notify owners and sitters on both sides, and kind of making sure that if they take the transaction off platform, they lose all the benefits that you get from a platform like ours, and that is in particular insurance, right? So if you stay on the platform, you do the transaction on the platform, you are covered by our insurance, and that's true for both the sitters as well as the owners, which is a key benefit and one of the reasons that a lot of sitters kind of stay with us. The other way we use data and AI is kind of understanding sitter and owner behavior. And so, we know a lot about our sitters. We know a lot about kind of how their repeat behavior should look like, and be using that to identify sitters that might not do the right thing. And so this is kind of built into our search algorithm now. We've done a kind of leapfrogged again the abilities of our search algorithm now with pull them out of our existing infrastructure into its own infrastructure. So it means, over the next, already now, we've deployed the first version of that just 2 weeks ago. You've seen, site speed for some of our search results is pretty much 10 times what it was before. And over the next kind of 3 to 6 months, we'll see more and more kind of improvements on that in terms of the speed of our search, but also the ability for us to test more things in terms of what the search algorithm takes into consideration, what kind of inputs we can feed in. And one of them is obviously repeat rate, making sure that we push sitters up that are a perfect fit for the owner, but then B, also doing the right thing by the platform.
Now, quite a few people will be aware that you guys have a relationship with Seven West Media, and part of that deal is there's been an advertising campaign. People with an eagle eye would notice a few of those ads. From your perspective, has that reaped benefits yet? Have you seen an uptick? Have you noticed any changes since the ad campaign?
Yeah, so we've had the first burst of the campaign go live in beginning of September, essentially, and we only ran kind of a smaller burst in Queensland and Victoria, and we've seen. I think you can see that in kind of one of our last releases in the AGM report, for example. You can see that we've seen a significant uptick in the states where we ran the campaign. So, I think that was very promising because we all know, it's not like you run a TV campaign and people kind of run to your website instantly. It's kind of really a bit of brand building where the payoff of that is kind of very long term as well. So I think this is for us, the first time that we're going to spend $4 million plus on above the line marketing, and the marketing obviously came as a non-cash marketing expense for us because it's a contra deal with Seven West Media. But it gave us that ability to kind of really lift the brand up, work on the brand recognition for Mad Paws in general. And we're kind of seeing now that that's kind of really bearing fruits. We've just launched the second burst of that campaign. So we're spending just about $1.3 million now in that contra before Christmas up until the second week in December. And we're kind of seeing that kind of really working through and helping us not just from a direct traffic perspective, but also from a performance marketing perspective, where we see numbers kind of improving very nicely.
Now, recently, Mad Paws announced the appointment of hybrid partners. Speak to us about that, and what does that mean for shareholders of Mad Paws?
Yeah, so we had a little bit of inbound interest into some parts of the Mad Paws business, and the board was in a position where we thought it makes sense, and it's kind of the right thing to do to kind of get external help with kind of going through some of those requests. And so we're in the process of kind of going through that to identify kind of whether there's an opportunity that we want to move forward. Nothing to report so far, but I think Highbury has been kind of great and kind of positioning us well for that. It's kind of a very experienced firm in doing so, obviously, but they also help us in general with kind of our strategy, making sure that that's sound in kind of how we move the company forward. But yeah, so in general, I think very, very good to see that there's some external interest into the business. And I think it kind of showcases that we've kind of really built something that's of value, particularly in the marketplace, with the data that we generate about our kind of customers and their pets is something that's it's very hard to gain for kind of your traditional retail businesses. So it's certainly the crown in our jewel, and a jewel in our crown.
Sounds like a potential liquidity event for us shareholders. Now, finally, what do shareholders outside of a potential liquidity event have to look forward to over the next 6 months with Mad Paws?
Yeah, so I think we're in a really good position at the moment. Pet ownership is obviously still as strong as before. I think from a recession perspective, pet ownership and spend on pet is kind of very safe. People still make sure that the pets are as well off as possible, and so I think we're kind of seeing everything going in the right direction, particularly with the media that we've just launched. So, $2 million of the 4 million is going to be spent before Christmas. We've got another 2 million spent in the second half of the year. So I think that effect is going to roll through, and we see some very good uplift from that for the business going forward. And other than that, I think we've done a particularly good job in the retail businesses and positioning them for profitability, for better efficiencies, driving as much automation as possible. So there's, I think, huge upside in that for particularly the retail businesses to kind of further drive the profitability of the business. And then obviously, once we get to that point where we are more consistently profitable, that also means we can reinvest some of those profits into growth. So certainly a big opportunity for us to further accelerate growth for the business.
Ladies and gentlemen, just a friendly reminder, this is not investment advice. Speak to your financial advisor. We're quite long on Mad Paws. We see the upside, but this is not an investment advice. But we see a lot of potential upside here. Well, it's always a pleasure. Thanks for your time.
Thanks, John. Talk soon.